shift immediately. It's like getting a gold star for adulting right when you deserve it. Let's talk about some real-life scenarios where this could make a big difference. Say you're planning to apply for a mortgage in a few months. With real-time monitoring, you can see exactly how your financial decisions are affecting your credit score in the lead-up to your application. You might realize that paying off that small credit card balance could give your score the boost it needs to get you a better interest rate. Or imagine you're traveling and your credit card gets hit with some suspicious charges. In the past, you might not have noticed until your next statement. But with real-time monitoring, you and the AI could spot those weird purchases right away. This quick detection could prevent a full-blown identity theft disaster and save your credit score from taking a nosedive. Now, I know what you're thinking. Hold up, this sounds an awful lot like Big Brother watching my every financial move. And you're not wrong to be a little concerned. The idea of constant surveillance of our financial activity can feel pretty uncomfortable. It raises some big questions about privacy and data security. Here's the thing. While real-time monitoring can offer some great benefits, it's important to be aware of the potential downsides. Some consumers might feel uneasy about the level of monitoring involved in these real-time credit assessments. It's a valid concern, and it's something that both financial institutions and regulators are grappling with. But let's look at the flip side. This constant stream of data can actually lead to more accurate credit assessments. Instead of judging you based on a few snapshots of your financial life, lenders can see the whole picture. They can take into account things like consistent on-time payments, responsible use of credit, and even how you bounce back from financial setbacks. This more holistic view of your finances could be a game changer, especially for people who've struggled with traditional credit scoring methods. Maybe you don't have a long credit history, or you've had some bumps in the road. Real-time monitoring gives you the chance to show how you're managing your money right now, not just what happened in the past. And here's where it gets really exciting. Real-time monitoring puts you in the driver's seat of your credit score. You're not just a passive observer anymore. With immediate feedback on your financial decisions, you can actively manage your credit health. It's like having a personal financial coach in your pocket, giving you tips and encouragement to make smart money moves. The power of small choices. How everyday transactions shape your credit. Let's zoom in on the everyday choices that shape your financial future. You might be surprised to learn that your morning coffee run or your weekly grocery haul could be secretly influencing your credit score. With AI keeping tabs on your spending, it's not just the big purchases that count anymore. Think about it. Every time you swipe your card or tap your phone to pay, you're painting a picture of your financial habits. AI algorithms are now analyzing these patterns in real time, giving lenders a much more detailed view of your money management skills. It's like having a financial fitness tracker, but instead of counting steps, it's counting your smart money moves. Remember how traditional credit scoring used to work? It was all about big-ticket items like mortgage payments or credit card bills. But now, AI is looking at the little things too. That $5 latte you buy every morning? It might actually be helping your credit score if it shows you're consistently making small, manageable purchases and paying them off right away. Here's the thing. AI can tell the difference between necessary spending and splurging. It's not just about how much you spend, but how you spend it. For example, if you're regularly buying groceries and paying your utility bills on time, that's a good sign. It shows you're responsible with your everyday expenses. On the flip side, if you're constantly splurging on luxury items or making late-night impulse purchases, AI might flag that as potentially risky behavior. Let's talk about how this could play out in real life. Imagine you're a freelancer with an irregular income. In the old system, you might have struggled to get a good credit score because your income doesn't fit the traditional 9 to 5 mold. But with AI analyzing your transactions, it can see that even though your income is variable, you're consistently paying your bills and managing your money well. That could give you a big boost when it comes time to apply for a loan or rent an apartment. Or think about someone who's just starting out in their career. They might not have a long credit history, but if AI can see that they're responsibly managing their student loan payments, buying groceries regularly, and setting aside money for savings, that paints a picture of financial responsibility that could open doors for them. Now, you might be wondering about privacy. After all, having AI analyze every coffee purchase and grocery run feels a bit like Big Brother is watching your wallet. And you're right to be concerned. In fact, Many consumers are worried about how their financial data is being used and whether it's adequately protected. It's a valid concern, and one that regulators and financial institutions are grappling with. But here's the flip side. This level of detail in transaction analysis can actually be a good thing for many people. Think about folks who work in the gig economy, or small business owners, or anyone else with a non-traditional income source. In the past, they might have struggled to prove their creditworthiness. But now, AI can see the full picture of their financial lives, including all those small, consistent payments that add up to responsible money management. So, what does this mean for you? Well, it's all about being mindful of your everyday financial choices. Every purchase, every bill payment, every savings deposit is like a brushstroke on your financial portrait. And with AI watching, you have the power to actively shape that picture. Here are some smart money moves to consider. 1. Set up automatic payments for your regular bills. This shows consistency and reliability. 2. Use your debit or credit card for everyday purchases rather than cash. This creates a trackable record of your spending habits. 3. Try to maintain a steady balance in your checking account. Wild swings up and down might be seen as a red flag. 4. If you have subscriptions or memberships you don't use, cancel them. Regular payments for services you don't use might be seen as poor money management. 5. Consider using a budgeting app that categorizes your spending. This can help you stay on top of your finances and show AI that you're actively managing your money. Remember, it's not about never treating yourself or living like a financial hermit. It's about showing that you understand the value of money and are making thoughtful choices about how you use it. Beyond bank accounts, the new financial data points. Ever wondered if being a responsible Netflix subscriber could boost your chances of getting a mortgage? Well, in 2025, your financial reputation isn't just about what's in your bank account. It's about the hidden clues in your everyday life that speak volumes about your money habits. Let's explore how the little things you do daily are painting a whole new picture of your creditworthiness. Think about it. Your financial story is no longer just about bank statements and credit cards. It's time to look beyond the traditional playbook. AI-powered credit scoring systems are now considering a much wider range of data points to get a fuller picture of your financial health. And guess what? This could be great news for a lot of people who've been left out in the cold by old-school credit scoring methods. Let's talk about rent payments. If you've been diligently paying your rent on time every month, that's a strong sign of financial responsibility. In the past, this kind of consistent behavior wouldn't have made a dent in your credit score. But now it's becoming a valuable piece of the puzzle. Imagine being able to use your history of on-time rent payments to help you qualify for a mortgage. It's not just a dream anymore, it's becoming a reality. Utility payments are another area where your everyday habits can make a difference. Consistently paying your electric, water, and gas bills on time shows that you're on top of your financial game. These regular payments, which used to fly under the credit radar, are now being factored into the equation. It's like getting credit, pun intended, for something you're already doing. Now let's talk about the gig economy. If you're a freelancer or have a side hustle, you know that your income can be a bit unpredictable. Traditional credit scoring systems often struggle to account for this kind of variable income. But here's the thing, AI-powered systems are getting smarter about recognizing the patterns in gig work and freelance income. They can see the bigger picture of how you manage your money, even when your paycheck isn't the same every 2 weeks. Here's where it gets really interesting. Remember that Netflix subscription we mentioned earlier? Well, it turns out that your streaming habits could actually be a good thing for your credit score. Consistent payments for subscription services can indicate financial stability. It shows that you're able to manage regular financial commitments, even if they're small. It's not just about the amount you're paying, it's about the habit of responsible financial management. Of course, with all these new data points comes some challenges. How do we make sure all this information is verified and standardized? It's a bit like comparing apples and oranges. Each data point is different, and they need to be weighed and measured in a fair way. The financial industry is working on creating systems to handle this diverse data, but it's still a work in progress. One of the most exciting things about this new approach is how it can help people who've been underserved by traditional banking systems. Think about someone who's never had a credit card or a bank loan. In the past, they might have been seen as a credit risk simply because there wasn't enough information about them. But now, their history of paying rent and utilities on time, managing subscription services, and earning through gig work can all contribute to building a positive financial profile. This broader view of financial behavior is leading to fairer credit assessments. It's not just about how much money you have, it's about how you manage what you have. Are you consistent with your payments? Do you live within your means? These are the kinds of questions that AI-powered systems are getting better at answering, and they're doing it by looking at a much wider range of data than ever before. Blockchain and credit, securing your financial identity. Let's talk about something that's changing the game in credit scoring, blockchain technology. You've probably heard of blockchain in relation to cryptocurrencies, but it's so much more than that. In 2025, it's becoming a powerful tool for protecting your financial identity and making credit scores more secure than ever before. Think about it. Your credit score is like your financial report card. It's a big deal, right? But what if someone could tamper with it or steal your identity? That's where blockchain comes in. It's like a digital ledger that can't be altered once information is recorded. Pretty cool, huh? Here's the thing. Traditional credit reporting systems have some weak spots. They're centralized, which means all your data is stored in one place. That makes them vulnerable to hacks and data breaches. We've all heard those scary stories about millions of people's personal information being stolen. It's enough to make anyone nervous about their financial security. But blockchain flips the script on this problem. Instead of having all your data in one place, it spreads it across a network of computers. Each transaction you make gets recorded as a block and added to a chain of other blocks. Once it's there, it can't be changed without everyone on the network knowing about it. It's like having a whole team of watchdogs guarding your financial information. Now, you might be wondering, how does this actually help my credit score? Well, imagine every time you pay a bill, take out a loan, or make a purchase, it gets recorded on this secure blockchain. Lenders and credit scoring agencies can see this information, but they can't mess with it. This means your credit score becomes a true, tamper-proof reflection of your financial behavior. But it gets even better. Blockchain could give you more control over your own financial data. This is what experts call self-sovereign identity. Sounds fancy, but it's actually pretty simple. It means you decide who gets to see your financial information and for what purpose. You're in charge, not some big corporation. Some companies are already experimenting with blockchain-based credit scoring. For example, there's a startup that's using blockchain to create credit scores for people who don't have traditional banking histories. They look at things like cell phone bill payments and other alternative data to build a credit profile. All of this information is securely stored on a blockchain, making it reliable and fraud-resistant. Now, I know what you're thinking. This all sounds great, but what about my privacy? It's a valid concern. After all, we're talking about some pretty sensitive information here. The good news is that blockchain can actually enhance your privacy. With the right setup, you can choose to share only the specific information a lender needs, without revealing your entire financial history. Blockchain could also be a game changer when it comes to disputing errors on your credit report. We all know how frustrating that can be, right? With blockchain, every transaction is recorded in real time and can't be altered. This means it's much easier to prove what really happened if there's ever a disagreement. No more endless phone calls and paperwork to fix a simple mistake. The Consumer Financial Protection Bureau, CFPB, has been paying attention to these developments too. They've recognized that AI and blockchain working together could create a more transparent and fair credit scoring system. It's all about finding innovative solutions to the challenges we face with current credit assessment methods. Here's another cool thing about blockchain and credit scoring. It could make the whole process more inclusive. Remember how we talked about people who are credit invisible? Blockchain could help them build a verifiable financial history without relying on traditional banking systems. This could be a big deal for people in developing countries or those who've been left out of the traditional financial system. Personalized